Hey everyone, I'm Soil and welcome to Chain Rush. Today we're diving into Bitcoin's thrilling run toward new all-time highs and what's really powering this rally. As I record this on May 12, 2025, Bitcoin is hovering around $104,426, just a whisker below its record peak of $109,588. What's behind this surge? We'll trace the story from high-stakes trade negotiations to institutional cash flows, unpack emerging risks, and map out what this means for your crypto portfolio, drawing on real data and expert analysis every step of the way. It all started in Geneva, where U.S. Treasury Secretary Scott Bessent and China's Vice Premier He Lifeng stunned markets by announcing a 90-day tariff truce that slashes U.S. duties on Chinese goods from 145% to 30%, and reciprocally cuts Chinese tariffs on American exports from 125% to 10%. According to CoinDesk, that announcement sent risk appetite soaring, triggering a wave of short liquidation events and lifting Bitcoin from the mid-97,000s to over 105,000 within days. In simple terms, easing global trade tensions removed a major headwind for markets, and Bitcoin, ever the high beta asset, grabbed the upside. Meanwhile, all eyes turn toward U.S. inflation data. The U.S. Bureau of Labor Statistics has scheduled the April 2025 Consumer Price Index release for May 13, 2025, at 8:30 a.m. Eastern Time. With investors betting that tame inflation could persuade the Federal Reserve to hold rates steady or even signal cuts, Bitcoin's appeal as a non-dollar store of value has only intensified. In fact, lower CPI readings often coincide with looser monetary conditions, pushing yield-hungry capital out of cash and into alternative assets like Bitcoin. On top of macro catalysts, institutional investors have been pouring unprecedented sums into Bitcoin. BlackRock's Spot Bitcoin ETF, IBIT, has amassed nearly $7 billion in net inflows since January, and has recorded inflows on 20 straight trading days totaling over $5 billion. This level of consistent demand is nothing short of historic, and it's stabilizing Bitcoin's price swings while drawing in more conservative money managers who once shied away. But it's not just big institutions making waves. A recent study in the Journal of Economics of Humanism shows that AI-driven sentiment analysis of social media, from Twitter to Reddit, now provides real-time insight into public mood, allowing traders to anticipate market moves before traditional indicators catch up. Positive chatter about Bitcoin's upcoming Fed implications or ETF flows can amplify each other, creating self-reinforcing rallies that boost short-term momentum. Of course, no story of Bitcoin is complete without talking about its signature volatility. Even as implied volatility stabilizes in the 50 to 55% range, well below previous bull market peaks, Bitcoin remains capable of 5 to 10% price swings in a single session when news breaks. And while easing tariffs and favorable CPI readings are bullish, any hint of a trade deal unraveling or hotter than expected inflation could trigger a rapid sell-off. Traders should remember that Bitcoin's historic fat-tailed returns mean big gains come hand in hand with sharp reversals. So what does this mean for you? On one hand, Bitcoin's current trajectory, driven by macro relief, institutional cash, and real-time sentiment insights, offers a tantalizing path toward new records. Adding Bitcoin to your portfolio now could capture outsized returns if this momentum continues. On the other hand, you need a strong risk management plan. Set clear entry and exit points. Use stop-loss orders to protect against sudden drops, and avoid over-allocating to an asset that can reverse course in hours. Before we wrap up, remember that tomorrow's CPI release and any updates on the US-China truce are your next major watch points. Keep your news feeds tuned to CoinDesk for real-time updates and data releases. If you're bullish, consider scaling in gradually. If you're cautious, watch for key levels, like $109,588 on the upside and $100,000 on the downside to guide your strategy. Thanks for watching Chain Rush. Are you leaning in or sitting on the sidelines as Bitcoin chases new highs? Drop your thoughts in the comments, hit subscribe, and ring the bell so you never miss our data-driven crypto insights. See you next time.